Welcome back, Andrew. You know, your forecast, your adjustment on earnings came on the same day that Lululemon said that it was warning, that it was coming in at the low end of forecast on sales. What are you seeing that they are not?
Yeah, so I think one thing we're seeing is very strong consumer demand. So we're seeing great traffic, great traffic and large traffic increases to our stores, to our websites, and to our wholesale partners. So we saw very strong sellout. I think Lulu commented a little bit on they're having difficulty keeping their stores open. Our stores, frankly, are smaller. They're easier to staff. So I think we have an easier operational challenge. But we're seeing very strong demand for the brand. We saw that all through the year. 67% growth for the full year is obviously a huge number. And as we look forward into 22, we're also really excited about both the growth prospects of Crocs. We're guiding to 20+% growth rate in 22. And then obviously we recently made an acquisition of Hey Dude, and we're super excited about that too.
The stock has reflected everything you just talked about, up 70% over the last year. And I guess the question is, how do you run with that momentum? You've nailed some of the partnerships and the collaborations with Justin Bieber and others. How do you keep it cool, in other words? Because Crocs has gone through waves in its history. Maybe it was just a pandemic phenomenon. How do you make sure that's not the case?
Yeah. I think there's a couple of things, right? So we've got to keep it cool, but before we keep it cool, we've got to stay focused on, I think, what are the consumer drivers? What is the consumer looking for? I think the consumer on a global basis is looking for comfort. They're looking for sustainability. They're looking for easy on and off, and they're looking to shop digitally. So we're looking to lean into all of those trends. And then on top of that, we're trying to inspire them with our collaborations, with our social marketing, and with some of our, celebrity endorsements. So I think you've got to have a strong foundation with where the consumer is and where the consumer is going. And I think those consumer trends are long-run trends. They're not going away. They may have been accelerated by the pandemic, but nobody's going back to wearing uncomfortable shoes. Nobody's going to stop shopping digitally. Nobody's going to reject personalization. I don't think, as the consumer gets back to work and maybe COVID ends at some point.
It's interesting, Andrew, the selection of Crocs that you've got behind you for this interview. And you mentioned the celebrity endorsements as well, which obviously have done so well for you. I just wondered how well of your total sales the boring, traditional, plain-colored Crocs do relative to all the newer versions you brought out in recent years.
Yeah, so that's a great question, Wilfred. The majority of sales are on the sort of boring, plain, vanilla Crocs, right? So the classic clog, which is the core of our product range, and that's what most of these collaborations behind me are built on, that classic clog chassis. That's obviously deliberate. If we can make the classic clog special, the consumer will also be interested in buying the what we call the core ordinary colors. And those have really driven a huge part of the business.
I haven't been able to get my hands on the Lightning McQueen toddler Crocs, Andrew. I don't know if that's just me or maybe that was a hot item, but are you seeing shortages of materials and are you able to meet demand with the production constraints that we're seeing across the board right now?
Yeah. Generally, yes. There are shortages on isolated products, absolutely. But as we look at the trajectory during 2021, we got better and better in terms of being in stock, both in our DTC channels and putting our wholesalers in a position to be in stock. I think one of the reasons why we had such a successful holiday season is we were in stock really across all channels. Not every single item. There are obviously some misses, but in general, we had good stock levels. And so when the consumer was out there, especially in the 2 to 3 weeks right before Christmas, when they have to make that purchase, we were in stock and they bought the product.
And finally, just on that acquisition you mentioned. I just wanted to ask about the Hey Dude acquisition very quickly. Because do you think Wall Street understands it? I know you put some updated numbers out today on that.
Yeah, I'm not sure they fully understand it yet. And I think one of the reasons is, look, this is what we think will be a $700 million brand this year, right, in 2022. That's our guidance that we've issued, 700 to 750 in terms of revenue. Frankly, as a casual footwear brand, that's a top 10 global footwear brand. But yet, its sales are very concentrated in the Midwest, Texas, and the South. And so a lot of sort of Wall Street or investment professionals that tend to live on the coasts really haven't heard of it and don't see it around. So they're a little demystified. So I think they're trying to put together the price we pay, the size of the brand, and the fit with Crocs. I think, we as a company are super excited. We think it's a great fit with us as a company and a great fit with the consumers that we're reaching. We think we bought it at a good price, and we think it's highly profitable, it's growing very fast, and it has a long runway. So we think this is going to play out extraordinarily well. I don't think the broader investment community has fully understood or digested it yet, but I'm sure they will over time.